the market remains pretty firm. It's still technically in a seller's market. There is one sort of outlying data point from July, and that is that the number of sales taking place, which had been kind of lowish, trending below what we saw 12 months prior, it was really strong in May and June at sort of 30% stronger in terms of more sales than the previous May and June. And in July, it dropped back down again to less than last July. And my main question about that is, look, does that reflect a reduction in buyer demand, or is it just some variability? You do obviously get from month to month some variability in the data. We're not seeing evidence on the ground that there is a pullback in buyer demand. There's still very strong attendance at open homes, and lots and lots of offers being made on properties. So buyers, especially in the entry level market, the sort of under $1 million, 600, 800, 900, whatever, that segment of the market particularly strong. But overall, on average, we're seeing several offers per listing over the life of a listing. So, if you get 3 buyers who want to buy each listing, that's a strong market. And in that environment, prices will trend upwards, or they'll be under pressure to go up. As I say, the number of sales taking place, and obviously we'll get into this, but the number of sales taking place is really the only indicator that goes against the general theme, which is that it's a tight market. We're in a seller's market. And my message to buyers continues to be just buy now before it gets more difficult. And the message to sellers is that if you've been waiting, if you're holding back because you think you can't sell, you can. So some properties that perhaps weren't selling or couldn't achieve a certain price 6 months ago or 12 months ago, maybe not 12 months ago, because of course prices come down since then, but they're under pressure upwards again. And if you couldn't sell 6 months ago, then chances are that now you can. All right, let's get into it. Median sale price, $737 in July versus $809 and $100 a year ago, down 9%. 9% is less than what we've been seeing over the last 12 months or so. But interestingly, so you see here the general shape of things since July last year. It's been broadly flat, but interestingly, the July number here at 737 is lower than anything we've seen since the peak. And so, it does bounce around a bit. We came down here and hit a trough in August last year, then it recovered up a bit, and then we hit another trough in, December last year, then again another low in February, March, April, May, June, or maybe that's March, April, May, June, July. So but these troughs have trended ever so slowly downwards. So it is a lower number than we've seen since kind of late-ish 2020. But does that mean necessarily that we're going to see a new tranche of weakness? It doesn't feel like that to me. So I suspect it's just a bit of data variability. If you follow these videos, or if you attend these Zoom meetings, you'll know that I don't pay too much attention to the median sale price, because as much as underlying values, the median sale price reflects the mix of properties sold in that month. So let's not pay too much attention to that. Let's pay more attention to these numbers. This is the Real Estate Institute House Price Index. And this is the best attempt that we have to estimate the movements in underlying values of properties. So just starting here, I've highlighted the degree to which values have dropped since the peak in late 2021. Wellington has still fallen further than anywhere else. I have seen that number, if I recall rightly, as big as negative 26%. So we have recovered a bit since those lows. Auckland is almost caught up to us at almost 22%. And the gap between Wellington and the rest of New Zealand at negative 17 is not as great as what we have seen. Over the last year, you'll see that the difference is a lot narrower. So the whole of New Zealand over the last 12 months fallen about 7%. Wellington's fallen about 10%. Not a huge difference in it. We did see a big difference in the rate at which Wellington was falling in the first sort of 6 months of 6 months after the peak. So 6 months after the weakness sort of set in. Over the last year, the movement in Wellington values has been much more similar, although still greater than most other regions and the country overall. Interesting here, you look at these across the whole country there, all the different regions, the movements and values over the last 3 months, you look up and down there, you see really a good mix of negative numbers and positive numbers, none of which are huge. There's no 5% in there. It's, minus 1%, plus 1%, minus 0.5%, whatever, And so, whereas a few months ago, these numbers were pretty much all negative, now you are seeing a good balance of some negative, some positive. And so whilst Wellington has been stabilizing for I started sort of commenting that I saw Wellington City start stabilizing about a year ago, Wellington region stabilizing in the last sort of 3 to 6 months. And New Zealand overall generally has been starting to show signs of stabilizing over the last couple of months in particular. And you can see that there with various regions actually showing growth in the last 3 months. So good balance there of growth and deterioration. Looking here, splitting the different territorial authorities within Wellington region, that's the city, Pororua, Upper Hutt, Lower Hutt, and of course the region overall. But starting with the region overall, you see, look, over the last 1 month, growth of 0.3%. Over the last 3 months, growth of 0.1, let's call it 0. So over the last 3 months, Wellington region has been broadly flat. And again, you can see that in here, in the graph here, the shape of the graph, the orange line is the 3-month results. You can clearly see the trend there. Look, it bounces up and down a bit. There's no question. It's a bit like a sawtooth. It does have peaks and then troughs and then peaks again, and then a trough in May, and then back again in June, and then down again in July. But the trend is clear. Overall, it's been heading up since May last year, back up towards parity, which of course is the x-axis representing 0%. That shows here in the 1 month and the 3 month results. Value stable over 3 months. Yes. If you look here over 3 months, so Wellington region grown only 0.1%, Auckland grown 1.6%, and New Zealand overall on average 0.6%. Does that mean that the Wellington region the recovery of the Wellington region is now lagging behind New Zealand and Auckland? I wouldn't jump to that conclusion just yet. I think it's early to say there. You can see there that, as I say, it's a bit of a sawtooth pattern in here. The results are down in July, but they were up in June. And we're catching it a bit on the downside here. Let's see, up next month, it could be a bit up. So the numbers can bounce around a little bit from even on the 3 month basis. So I would say it's too early to say that yet. It's possible, of course, but too early to make that call yet that is a trend. This is just a point of interest, really. I think this would surprise most people. That if you asked most people out there, if you went and did a straw poll on the street, how much have real estate prices changed, be it grown or fallen over the last 5 years? That's on average per annum, of course, in Wellington City or Auckland. I don't think most people would think that it was only 3% per annum. Most people would think that prices have grown a lot more than that. There's a real belief out there that real estate prices are just astronomical and they've just grown out of control. And so if you told people, did you know that on average in the last 5 years in Auckland, real estate values have increased by 3% between 2018 and 2023? Same for Wellington City. I think most people would be surprised by that. It's really not incredible growth. I mean, before 2018 in Auckland in particular, you saw very strong growth. In Wellington, you saw growth for a good couple of years before 2018, but prior to that, of course, it was broadly flat for quite a long time. Anyway, that's just a point of interest. Looking here at Wellington City, and you can see some negative numbers there again, and this here is the the graph for the house price index changes for the Wellington city, not Wellington region, but the city in particular. And as I said before, I was suggesting that Wellington city values were stabilizing from about July last year. And you can see that in the blue or the orange graph there. The orange is the 3-month, the blue is the 1-month result. If you've got a graph that's bouncing around the x-axis like this, that's, you know, stable-ish. Overall, you can see over the last year, it has still been a drop of 10%. So the number of months where it's been below zero still outweighs the number of months where it's been above zero or on average. But nonetheless, you can see the shape of things there. That is not a deteriorating line or really an improving line. It's a broadly stable line bouncing around zero. And the 3-month result there shows the same thing, recovering from quite a deep loss of value up to about middle of last year, and then recovering with, again, a big drop sort of late last year and early this year. So if you look at Wellington City results there over the, the last period of time, or the last 1 to 2 months in particular, 1 to 3 rather, these are negative numbers for Wellington City, whereas they're positive numbers for the other territorial authorities. And again, the question that raises is, does that mean Wellington City recovery is now starting to lag behind the other regions? This is a very recent thing. It's been the other way around. We've seen Porirua and the Hutt Valleys being weaker than Wellington City. Does this mean things have turned around and now Wellington City recovery is lagging behind the other regions? It might be the start of that trend. Too early to make that call yet, is what I suggest. All right, now the number of new listings, and this is just a continuation of the theme, really. 371 new listings in July versus 546 and 535 1 and 2 years ago. Still down by about a third. Vendors are still broadly on strike. You see those two numbers there for June and July. They are low. You see the red line, which is the 6-month moving average, just been going down and down and down and down and down consistently again since the middle of last year. Which, as I say, is when I started just talking about signs of stability starting to return. So it's really at really very low levels here. And the next graph, there we go. That's the average for July. So the average for July since 2015 is 535. So it's 371. That's anemic. Last 2 Julys, 546 and 535, is broadly in line with that average. So those are pretty normal kind of July volumes. So we're still running at very low levels there. And this graph clearly shows that this is the degree to which the number of sales taking place is more or less than the same month 12 months ago. So you can see there that vendors have basically been on strike since September last year, and it's just been consistent since that time. So that's 10 months now. Anywhere between 25% and 45% broadly fewer listings than we saw the 12 months prior. Now, obviously, this graph here, it can't stay, or it's very, very unlikely to stay below the x-axis for more than 12 months, because if by September this year we're a further 10 or 20 or 30% down on September last year, when September last year was 25% down, that is an extreme weakness in the number of listings, and very, very unlikely to be that way. So I would expect from September we will start to see it at least return to parity. Then we will be making comparisons with a very weak period of 12 months in terms of new listings. Number of sales, and this is an interesting, as I sort of indicated at the top of this meeting. This is a bit of a data outlier, a bit of an outlying point here for July at least. We were seeing sales volumes a bit below what we saw 12 months prior, a bit weak, but that was generally recovering back towards parity. And then in May and June, it pushed really past through that for a couple of months, where we started to see really strong buyer activity again. And in July, it's come back. So you see here 427 versus 509 a year ago, 618 2 years ago, down 16 or 31% compared to those months. So back down to a reduction, and oopsie daisy. There we go. Yes, so there's the average for July. 628. So it's a big drop down again. It's like a third down on what's normal. So even July last year was a low month for sales volumes, and of course that stands to reason because at that point the buyers had really gone on strike since the peak of the market for about the 6 months prior to that. July 2021 was much more normal. So certainly sales volumes low again in July, whereas they were very strong in May and June. And my question here that I'm saying here is that a sign of buyer weakness, of buyers pulling back again? It doesn't feel like that's happening on the ground. Certainly, and with me and my colleagues, we're seeing tons of buyer activity out there. The problem that we're facing out there is not enough stock to satisfy the demand at the moment. So, is this pulling back of a number of deals? Is that at least partly due to the fact that we have seen so much contraction in the number of new listings coming to the market? Is there just insufficient new stock to satisfy the demand that's causing at least some constraint on that? That's a question, not an answer, but that's one other thing that can be constraining to the number of deals getting done, of course. And there you can see it quite clearly. The number of deals getting done, as relatively speaking, compared to 12 months prior, it was recovering nicely throughout the whole of this year. And then the last couple of months, May and June, it really was a very strong result, good numbers of deals getting done, and it's fallen back again compared to July last year. Interestingly, if you look at these numbers here, July last year was actually a relatively strong month. Sorry, that's August. So no, I'm seeing things there. So yeah, it certainly is a weak month. Is that a new trend? I suspect not, but who knows? We'll see when next month's data come out. How long does it take to sell? So it's still taking a wee while, 52 days, been reasonably sort of stable around 50-ish days over the last 5 months. 2 months prior to that, we had in the 60s, so that was really slow. So it's certainly past those peaks of well into the 60s, been relatively stable around the 50-day mark. But that's still slowish. But past the peaks we saw, earlier this year, and it's continues to be quite stable around those 50-day mark. The amount of supply we got on the market expressed in a number of weeks worth. So this means, if those of you not familiar with this inventory statistic, it's basically it means that if we didn't bring any more stock to the market and things continue to sell at the same rate that they have been, how long would it take to sell everything? And the answer is 11 weeks in July, 10 weeks in June. Prior to that, it was significantly more than that unless we go right back to late 2021, where we hit the peak. And the average for Wellington, the long-term average, is about 14 weeks. So 10 weeks June, 11 weeks in July. This is a step down below, clearly a step down below what's average. So technically undersupplied, technically a seller's market. Number of Trademe listings, and this is a similar sort of a theme here. You can see here quite clearly, number of Trademe listings has been dropping off since start of this year. Now, partly that will be seasonal in winter time. Less stock coming to the market. But I've seen plenty of winters where the supply has been very strong. Last winter we saw a bit of a dip here, and then it started coming back a little, and it was much more supply than we're seeing now. So the amount of supply we're seeing now is equivalent to right back at the very, very start of 2022, a little more than what we saw at the very, very end of 2021, just as we were sort of hitting that peak. Technically, that was the peak in terms of values. But by that point, the activity levels had already started to slow down. We started to see fewer deals getting done. So the amount of supply was already increasing before we actually reached the technical peak in terms of values. So yeah, you can see that significant drop off in Trademe values there, in Trademe numbers there, sorry. The last couple of months, you can see that the drop off from July to August has been reasonably small. Again, that will be caused partly by the reduction in the number of sales taking place. So obviously fewer properties getting sold, fewer properties getting taken off, fewer properties leaving the website. We have very few come on, but again, if we have even less being sold, then that will slow down the reduction in Trademe volumes that we're seeing. But anyway, 1,878 versus 2,878 a year ago, still a reduction of 27%. So still significantly down on 12 months ago, but still significantly up on the real lows that we saw back in August 2021. We didn't start seeing increases until November-ish, October, November 2021. So in August, 2 years ago, we were still at very, very low levels on Trademe indeed. And there you can see the relative movements. So yeah, it's a very similar result in August as we saw in July last month. I think in July we were 26% lower than the previous July. In August we're 27%, so broadly the same. So we might have seen the trough in terms of comparison and comparative numbers on Trademe compared to 12 months ago. Possibly we're hitting the trough or thereabouts now. So in summary, folks, Wellington and now increasingly New Zealand values have been stable recently. New listing volumes are consistently low since September 2022. Sales volumes weak in July after a particularly strong May and June. Duration to sell has been long, but it's quite stable and down on the recent peaks. When I say recent, that's earlier in this year. Inventory remains at below normal levels at 11 weeks versus an average of 14, so that makes it a seller's market. Trademe listings 27% lower than a year ago, but the degree to which we're dropping now is being moderated. It's a generally firming market. As I say, buyers don't wait for things to get better. Sellers, if I haven't put this in there, but my comment to sellers is if you have been wanting to sell and you think you can't, well, now you certainly can. And people are asking me, some people are asking me, what's the best thing to do? Shall I sell now or shall I sell later? I think one particular risk, if you wait for later, is that after the election, there's a real good chance, I think, that we'll see a big increase in stock coming on, and that might make it tougher in terms of more competition. I do want to make a big shout out to Real Estate Institute and realestate.co.nz that supplies all this data that I use. I actually have got some extra slides that we can go through now, which is all from Tony Alexander's premium newsletters over the last few weeks, looking at general economic kind of indicators. So this is just a little bit of an extra, if you like. So this is Tony's analysis of FOOP. Those of you not familiar with it, I'm sure you probably are. Fear of overpaying. And FOMO, fear of missing out. So this is buyer sentiment, really. Fear of missing out just fell away completely as we hit a kind of October 2021, and it's been on the floor for sort of 18 months or so, and FOOP took over. I want to step back because I'm terrified I'm going to pay too much for my property and then lose a whole lot of equity. Well, that has now reversed again. So you see there, clearly, as I've been saying, over the last few months, we've seen buyer activity absolutely accelerate. And the buyers really are no longer concerned that they're paying too much. Especially anyone who's been in the market for a wee while, they can see clearly that the levels of activity has really rocketed over the last few months. So they're not so concerned with paying too much. They're now starting to be more concerned with missing out again than they are with paying too much. So certainly a reversal in the market. And that's nationwide. In New Zealand, in Wellington rather, I think it's even more exaggerated than that. And we will get to that. I think I've got here we go. So this is Wellington's recovery, and as I have said, Wellington has been recovering before most of New Zealand. We fell first, and we've been recovering earlier as well. So this is the measure of FOMO of New Zealand being the orange line, or Wellington being the blue line. So is FOMO coming back? And oh, look at that! And in actual fact, oh yeah, that's right. So Wellington, you see the orange line is Wellington and blue line is New Zealand. Wellington FOMO dropped away before it did across the country overall. Wellington FOMO returned before it came back overall in the country. I mean, it's marginal, but nonetheless, it's there. And so we're at, sort of 50% of agents reporting that overall buyers are showing signs of FOMO, not FOOP, whereas across the country it's more like 35%. And this is agents' feedback, Wellington versus New Zealand, about how prices are changing, and the orange line clearly saying there that if it's above zero, that's more agents saying that prices are rising than agents are saying that prices are falling. So for the last couple of months, agents have been, or June and July, agents have been saying in Wellington prices are now rising. More agents saying prices are rising than are saying prices are falling. In New Zealand overall, we've only just crossed the x-axis there on that basis. So again, Wellington recovering faster than the country on average. This is a couple of graphs on the latest migration. You've probably heard the latest migration numbers were up over, I think it was 82,000, and these graphs haven't quite been updated there, but you can see the shape of things. The migration boom certainly been very strong, but look at that graph on the right-hand side there. You see the monthly results. So February and March, really strong results there on a monthly basis. April and May, and the theme has continued for June and July, I understand. But interestingly, I understand that's also typical in that you intend to get the bigger migration numbers happening earlier in the year rather than during the wintertime. They come in the new year more than any other time. So that might not necessarily mean that migration is now pulling back. It might just be seasonal, but nonetheless, the 12-month figure there you can see is starting to flatten off. So perhaps migration, the boom is peaking. Still, it is peaking at a very high number. There was some conjecture that perhaps we'll get to 100,000, which would be a broadly 2% per annum population increase, which would be pretty extreme. There is, again, some doubt amongst commentators that I've heard at least that perhaps we might not get there, but still, it's pretty big numbers still. Latest data showing building consents continue to fall. When we saw building consents really fall away after the GFC here, they came right back down to like 12 or 14,000 building consents at their lowest point. Nobody thinks we're going to get anywhere near those low volumes, especially as the real estate market starting to show signs of recovery again. That tends to produce people considering building new again because they struggle to get existing properties. And so the general consensus is that building consents won't fall away nearly as much. Reduction in building consents, of course, puts pressure, creates tightness in longer term in the real estate market and supports prices and encourages price gains. So if that reduction is limited, then the pressure that puts on the market is reduced, of course. Interest rates, well, we saw interest rates starting to sort of head down a little bit, but as you all know, I'm sure they've bounced up again, even though the Reserve Bank has not increased rates. Some people are puzzled as to how that happens, and of course the answer is that banks don't just source their funding to lend to us as mortgages from the Reserve Bank, and the interest rates are not determined by the official cash rate here in New Zealand. They are also determined by the interest rates that the banks have to pay when they're borrowing from overseas. And generally speaking, the American economy came in stronger than what was expected generally, and so that pushed sort of rates, it firmed rates over in America in particular. And of course, when America moves, the rest of the world tends to move too. So that's my understanding, at least, is that pushed interest rates up here for mortgages. But the general consensus still is that generally the next move for mortgage rates will be downwards, but not necessarily immediately and not necessarily quickly. Labour market, we are starting to see very, very small increases in the level of unemployment. Thankfully, we are seeing wage growth pull backwards. Of course, this is what Adrian Orr will want to see. He'll want to see wage growth coming down because that will feed into reduced inflation numbers, which is what their target is, of course. Interestingly, the rental market is showing strength across the country for a long time there, for a while in 2022. Around the country, landlords were saying that it's really hard to find good tenants. the degree to which it's easy to find good tenants is really recovered, and generally speaking, people are finding that it's not hard to find good tenants again, and indeed this flows through to the expected rent increases that investors are hoping to push through, and that has started to recover as well. Interestingly, I did see an article yesterday on interest.co.nz which showed a table of the latest bond lodgement figures showing rents in the second quarter of the year compared to the first quarter of the year, and essentially across the entire North Island, everywhere rents were growing except for Wellington. So Wellington is a standout poor performer in the rental market at the moment, and the degree to which rents in quarter two had dropped versus the rents in quarter one was actually remarkable. It was a reduction of 9%, which is obviously enormous. I mean, if our rents dropped by 10% every year, we would quickly be going broke. So yeah, there's no question Wellington rental market is particularly weak at the moment. Auckland and Christchurch, I've seen reports that they're under real pressure. Auckland in particular from immigration is the commentary, and it stands to reason with all this immigration. The vast majority of it goes to Auckland. Those migrants will rent first before they are able to buy, or at least the vast majority of them will. So that will, of course, put a lot of pressure on the Auckland market, but we are not seeing it in Wellington. The Wellington rental market remains really weak. Investors are a bit pessimistic. This is again Tony Alexander asking the question, who are seeing investors? This is Crockers and Tony Alexander doing a survey of investors, who's thinking of selling and who's thinking of buying, and this is the net difference between the two. If it's a negative net difference, that means more investors are thinking of selling than are thinking of buying, and you can see clear recent significant deterioration there, a big change in the mood there. Investors have really been considering lately selling. Is this because they're starting to do their tax returns and seeing big tax bills as a result of non-tax deductibility of mortgage interest? Maybe. The other graph which I've seen and I couldn't find it to put in the slide, again comes from Tony Alexander, which was asking investors of those properties that of those people who are thinking of selling, what is the reason behind your selling? And the number of them that are saying the main reason is a loss of tax deductibility on mortgage interest has been going up consistently in the last few months only. So investors broadly been holding out and being stubborn, if you like, and just holding firm in the face of those difficulties. But in the last few months, it seems to have been hitting investors a bit. Yeah, you're welcome, TS. You're welcome, everyone. So, yeah, have a good night. Hope you stay warm and take care out there.